Thank you, and a very good evening to all of you. So before we start the session, is about access. But first, I wanted to check with you, right? How many of you feel access to markets is still a challenge for all of you? Can I see a raise of hands? That's it? Just 3 people? Can I see again a raise of hands? You can put it up. We are all, yeah. That's good, okay. Few, I mean, we can still count. Okay, how many of you think finance is where you need more help? Access to finance is not there. Credit is not there. That's still quite a few, I would say show of hands. How many of you feel you don't need any support, everything is fine? Okay, so that's a few. And what about the rest? Yeah, I mean, that's interesting. I don't know whether as Indians we are very, we don't state our problems, the good and the bad together, I'm not sure. But on that note, I think let's start the session. So we all talk about MSMEs being critical for the growth of the country. There's a lot of focus. In fact, today morning we had a session on ESG. We had Mr. Sinha from Niti Aayog. And he very confidently said, this is the time for India. He said, he's traveled to different countries overseas, and even quoting the Prime Minister, right, wherever he goes, there are always people wanting to say we want to source from India. But we want good quality, good price, etc., all of that. But this is the time for India. And who fuels, if you look at the Indian economy, right, we all talk about MSME, even when we're talking about ESG in the morning. For us to be, a net zero by 2070, we need the large as well as the small companies to make sure that we control our emissions properly. So on that note, let me start the discussion, and let me start with Dr. Sahai. Exports are very critical for the economy. Each state at the central level, they have been talking about larger export strategies, how to export a product, what kind of systemic enablements are required by different stakeholders. So on that note, to Dr. Sahai, right? Dr. Sahai, what are your views? What are the challenges that you think MSMEs they continue to face, especially given the global dynamics? And what is Shri doing? What are your thoughts on that?
In fact, let me put the things into perspective. We are not an export-centric economy like Southeast Asian country, but when you look at exports as a percentage of GDP, we are doing fairly well. The US, the largest economy, has an export to GDP ratio of 12%. China, the powerhouse of manufacturing, and export to GDP ratio of 21%. Japan has 19%. We are also faring well at around 21%. We are now looking into exports as a transformation for Indian economy also, and that's why the focus has rightly shifted to exports. We are looking into much challenging target of export, taking it to $2 trillion, which is little quite ambitious. But when I'm looking into the ecosystem, when I'm looking into the global factor which are favoring India, you refer to one China plus one policy of the global companies which are driving not only the trade into India, but also investment. The recalibration of global value chain is on the card, where US is making a very conscious effort to bypass China, where India is set to play an extremely important role because we have the resources, capability, and potential to emerge as alternative to China. We are also having some positive factor in the form of PLI scheme, which has been rolled out, where we have seen the success of that so far into the mobile sector. Very soon we'll see into electronics, API, and food processing sectors also. We have a very aggressive free trade agreement strategy also. And it is quite different from the earlier, where we have gone for the agreement with the countries who were very strong in manufacturing, be it the ASEAN, South Korea, Japan. And we landed in a situation where the import growth has outpaced the export growth, and there were huge criticism of the FTAs which India has signed. Now we are looking into FTAs with the complementary economies and our major exports market. So we have signed one with UAE, Australia, European Free Trade Association. We have formed up one with the UK also, where their parliament will approve, and now we are expecting it to happen as early as August. We are right now negotiating with US also of the BTA. We are engaged with EU. We are also having free trade agreement talks going on with New Zealand, Chile, Peru, as well as with the GCC country. So definitely government is looking into providing market access to everyone, particularly the MSME. When I'm looking into the market access issues for the MSME, I think the basic challenge is emanating from the factors such as environment, labor, ethical practices. We are seeing that new kinds of norms are being imposed by the advanced economy. We are seeing the agreement, the new agreement like CBAM coming into force. EUDR will be rolled out from 1st of January. ESPR will also likely to roll out from 1st of January 2026. And right now, most of the Indian MSME are not prepared for that. And I think probably we also have given a conflicting signal to the industry that it's not something which is part of the trade. We will retaliate against that. For me, I think the right move should be to sensitize the industry, handhold the industry, because we should see writing on the wall and try to prepare the industry to match that. Secondly, the word itself is becoming quite protective. If you look into the G20 countries, in the last 15 years, the protectionism measured by them has gone by 10 times. And that provides a challenge to the MSME. But at the same time, we are having huge opportunity. We have not yet exploited the potential of the e-commerce for our export sector. China is exporting roughly 10% of their total export through the e-commerce. For us, it's less than 2%. But now we are looking into quite an ambitious target for the e-commerce also. We are addressing all the policy bottlenecks for the e-commerce. We are providing a completely digitized environment for the e-commerce. E-commerce exports hub are likely to be established where they will provide much needed growth to the MSME. And I personally feel that this is something which is ideally suited to a country like India. We have exquisite craftsmen, artisans, small business, women entrepreneurs. They have the best of the product and services, but lack financial and marketing wherewithal to go for conventional exports. The e-commerce export provide them the right answer. As a newcomer, you are looking for a buyer and you want to ensure against the payment. These platforms provide you answers to that. So while on the one hand, we are looking into huge challenges, but there are opportunities coming into the way, and these opportunities are largely for the MSME. We are doing extremely well in knowledge and technology driven sectors of exports, not so in the labor intensive sectors of exports. And probably here, the industry and the government has to work together on number of issues, including on the labor laws and more so on the skilling.
Thank you, Dr. Sahai. And you touched about e-commerce, and my next question is to Abhay. So market access is also through e-commerce, and I'm not looking at export or domestic access, using e-commerce. However, using technology, becoming digital is not always easy for the MSMEs. You've grown phenomenally in the last many years. If you can share your growth story, what kind of challenges did you face? How did you adapt to technology to reach where you are today?
Thank you. Thank you for the question. Good evening, everyone. Abhay, Batra this side. I represent Clovia. We are a digital first, in part your answer, lingerie company. And we always said we are a tech company that is right now selling lingerie, and that came true in a way that we just launched John Player's Innerwear. We are part of Reliance now and one of the biggest D2C exits in the country. We ship about 15 lakh pieces a month across India, and we do some exports also, very little bit, but largely about 70% of that in tier 2 and tier 3 towns. For us, digital was not an option. It was the whole basis of starting that business was the fact that this sector had to be conquered with a digital tool only, because you're in a small town. Imagine, we are all privileged to be in Delhi, but I'm sure some of you do come from tier 2, tier 3 towns. So when we're in a small town and we want to go buy a trousseau, right? And I'm a lingerie man, I sell bras, so forgive me for talking like that. When you want to buy your trousseau in a place like, for example, imagine we started this 10 years ago. Go to Meerut, go to Haridwar. These places you'll only get 1, 2, 3 colors of bra, and that too few sizes. You may have to compromise on the color you want. You may have to compromise on the size you want, and you certainly will compromise on the design or the appeal of the product that you want. So that formed the basis of why we wanted to do this business, and we thought, and what was the biggest entry barrier to us was, one was the reach, which we solved via digital first. Second was supply chain, where we went to the likes of Shahi and Orient and all the biggies. We went to Bangladesh, China. China, of course, everybody says great, but in this sector, sizing and supply chain both is tough with China. So this is one place where, and we are proud. 99.9% manufactured in India. The remaining for Bangladesh, that too now has practically stopped. So what we did is we went to the bigger manufacturers, and they said the MOQ that you have to work with is 10,000 pieces, and 10,000 pieces in one SKU means I will at least launch 5 colors, I will at least launch 20 SKUs, so 100 SKUs, and all of them have 25 sizes. Imagine my first punt would be a crore. To start my business, my first punt cannot be a crore, right? Then I'm in a D2C segment. In a B2B segment, yes, of course, a crore means nothing, but we were a startup. So we thought that's not going to work. We post few pattern masters from these big guys, and we asked them to put up their own factories. Now we put up 15 factories at that time. They were our partners, not agents, and most of them are doing about 5-10 crore revenue a month right now with us. Primarily, they're selling to other companies also, and that's how we built our supply chain. This is still, so supply chain is still a moat in this sector as against finance and market, what we are discussing today. I'm going a bit, but this is the reality of our business. And then technology. So we are 5 co-founders, and one of them is a technology guy, one is a supply chain guy, I'm the finance, and there are 2 which are market guys, right? And so technology came as a point where it was. So imagine you're in a B2C company and you want to test out your product, right? You will spend on Meta and Google, etc. That's a given today. And I remember when we were acquired by Reliance, the first time we went to Mumbai to meet the leadership at Reliance, we said, what we need is competition to Google and Facebook. If India can achieve that, it has conquered the market. And that's Perplexity, for example, is solving. And he's bang on where he says, I'm trying to make the market move away from Google, right? And ChatGPT has now become the browser for most of us, right? I don't know, but it is for me today. So we said we will launch 50,000 rupees one SKU. Together we'll launch 100 maybe, but still 50 lakh rupees. And in that, we will do a first test. So it's a dip test, right? And once the product gets bought out, we know what is selling, we know what's not selling. So online gives you that flexibility and that kind of instant market feedback. You know what is coming as a return. And of course, D2C businesses are different. And today, there are enough and more tools in the market where you don't have. So a friend of mine runs a pet food company, and it's called Blep. And within the first 6 months, it's already doing about 1.5 crore in revenue, and raised some great capital from great names. And it has zero technology guys. It's a D2C company, and everything is built on Spotify, or there are tools today that manage your performance marketing. So for example, I have 20 people in my company doing performance marketing. He does the same thing, of course, very small scale, with a tool that costs him 25,000 a month. So today, the access to market in terms of tier 2, tier 3 digital, those who are on digital platforms, and most of us are, but those who are okay to buy. So most of my folks, so my father, for example, is online, always on YouTube or Google reading news or whatever, India, China, general. He's a retired guy, so but he would never buy from any website. So there are people who are internet users, but there are a subset. It's still a small subset of those people who actually go and buy, who are okay to buy online. So access to that today is very, very simple. So and I will let the others here comment on the finance bit, but market has been, it's been a great journey.
Thank you. I think very inspiring and very interesting. He talked about being digital first. I just wanted to again do another dipstick. How many of you have a digital strategy for your products as of now? Okay. So I think just looking at the responses, right, I think this is quite an apt discussion. I think there's still lots to be done for MSMEs to become digital. And I think from Abhay's point, right, I think tools are available. Awareness, knowledge, I think that is very important. Sometimes the different stakeholders, government, the financial institutions, etc., can play a role. But the MSMEs themselves can play a bigger role in driving their business, right, through digital. And I think Abhay from that way has been an inspiration about how he's grown his company. So moving from pure access to market to looking at financing, right? When you're looking at rapid growth, you are looking at digital growth. Is finance available to you that soon? So with that question now, let me move to Debajyoti. And at NESL, what kind of digital tool do you have? And what's the, how fast can you finance? How fast can you do it? Looking at the pace of the business.
Yeah, sure. Thank you. Thank you for having me here. And first of all, you said NESL, but let me just expand by saying NESL stands for National E-Governance Services Limited. The key word is national. Which are the other companies with the word national? We have NPCI, everybody is familiar, drives the payments. We have National Highways Authority of India, that's building beautiful highways. So we are national and we are building the digital infrastructure of the country, and we are there for all citizens of the country, and of course, most of all for the MSMEs, and which are seen to be the most important segment as far as employment is, contribution to GDP, contribution to export is concerned. Now, just as I stepped into this room, I saw one parameter about the productivity of MSMEs compared to large corporates. And I found that many of them are quite, there's a huge productivity gap. One reason, of course, I'm sure most of you would be aware, is the elongated working capital cycle, which in turn emanates from the long procurement cycle. What is the reason? And most of you would be aware that if you have to supply it to the government or to a large public sector entity, you need to provide a bank guarantee. Till date, the process was physical. I was in a similar conference a few days back, and I was told that from the time an applicant, which typically is MSME, makes a request to a bank for issuance of a guarantee, and that bank guarantee reaches the beneficiary, it takes around 20 days. That's the first bottleneck. And I'm sure all of you would have experienced it, those who have issued bank guarantees. Second bottleneck, when it reaches the beneficiary, he gets a physical document. He doesn't know it's genuine. In fact, there are news reports every now and then that crores of bank guarantees have been detected which are fraudulent. So beneficiary goes through a tedious process of verification of the BG, often by writing to the banker himself. And finally, the third step. Now the procurement is complete. Either the guarantee is expired, either the MSME has to get back his bank guarantee. Now, just before this, I came here, I was in a group and I was talking to a chairman of a large MSME unit. And I'm not sure, he may be in this group itself. So he said that after expiry of the bank guarantee or after conclusion of the contract, he gets back the bank guarantees after 2 to 3 reminders. 2 to 3 reminders. And this is what National E-Governance Services is trying to resolve. At every stage, so the guarantee gets issued and available to the beneficiary almost immediately. I mean, it takes a couple of minutes. And our system enables a product where you as a MSME, through the internet banking, can actually issue a bank guarantee without any kind of intervention. That's not happened as of yet, but our system has provision for that. So the guarantee gets issued immediately and it's available to the beneficiary online, no verification. There are three ways in which the beneficiary can verify the bank guarantee. He can access the portal and get the BG. Many large PSUs, government procurement portals have already integrated with NESL so that the bank guarantee on issuance goes and sits in the portal, is directly available on the portal. And this type is already with many large PSUs and government procurement portals. And finally, when the guarantee needs to be released, the beneficiary has to simply come to the portal and he does it wherever they are on the ERP systems, immediately it gets done. So the entire process gets sharp reduction in the time period, entire life cycle of a bank guarantee. And instantly the beneficiaries who are large corporates and government departments are also extremely happy with it because for them also they save a time and also their suppliers benefit. One final point, I think, Preeti, you mentioned that about the ESG and sustainability. Incidentally, this product also promotes sustainability. And recently we got the Business World Award for the Sustainable Technology Initiative of the Year. Why? Because it dispenses with paper at every stage. At no stage paper is required. There's a single source of truth which sits in the portal, and as a public sector entity, we have various safeguards in place to ensure that all this data is secure and is available only to authorized persons. So to conclude, this is a national infrastructure institution, National E-Governance Services Limited. This is there for MSMEs. We have tied up with 35 banks and more banks are on the way. All 35 banks are today issuing EBGs on our portal, and there are more than 500 beneficiaries who are already there in the portal, which includes procurement portals like GEM, JEPNIC, and Government of Karnataka. Karnataka is where we are based. So the beneficiary side, because initially MSMEs, they were slightly wary about this product because they were concerned whether the beneficiary will accept it or not. I mean, fine, you can issue a BG, but will the beneficiary accept it? So that's when we also tied up with the recipients of BGs, the beneficiaries. And now they are happy. They are saying, yes, we'll accept. Large companies, large beneficiaries, government procurement portals, they are saying, yes, we are happy to accept. Because for them also it brings great value. It helps them manage their stock of BGs in electronic manner. So this is an infrastructure institution. It is there for most bankers. So if you require a BG, please do approach your bankers, request for a BG. Believe me, it will make a difference to your working capital cycle.
Thank you. Moving on to Deepak. Deepak, how do you see, the technology lending taking place? How do you help the MSMEs in this way?
Hi everyone. Good evening, everyone. So, just learning from what all the participants are saying. One thing is there that as the business keeps moving and evolving, small companies want to become big. Bigger companies, they want to access new markets. Those who are doing domestic want to move international. Abhay was talking about it's a D2C brand, but probably would want to expand internationally. So everyone is looking for expansion, but when it comes to capital, we are always looking at banks, right? And so I represent a company called RIP Capital, where we are also providing working capital to MSMEs through the trade finance route, largely looking at exporters and importers. So how we add value is by providing, giving you access to capital. Not traditionally, when a company reaches out to any traditional financing company, the number one concern is obviously, rate of interest, right? And the second is collateral. Now, what the new age companies today are looking at is that, is time. Today, because of what is happening today, because of the geopolitical issues, dollar INR rates, a new opportunity or trade may emerge that you may want to, exploit and enter in that particular domain. But then you have to look back, that is your bank, is your working capital banker supporting you or not? And by the time you're always kind of stuck in that cycle of ki, sir, provisionals, acha sir, provisionals, audit kab honge, audit and provisionals, you're always in that kind of financial cycle of banks, taking their time to provide you capital in the traditional sense, because obviously they are doing it at a single digit kind of rate. So today, companies like ours have come into the market. We are helping expand, exporters and importers in India by giving access to capital uh, in a span of days, right? So the team, when I was working in a bank early on in my career, I used to have this saying that we only give money to people who don't need it, right? So for every 10 applications that used to come to us, we used to reject 9. Today, we are in the business of giving money to people who actually need it, and obviously, everyone may not meet our terms and conditions, but we are able to say yes or no in a matter of 48 hours. So time is of the essence today, and today as we are all obviously competing with each other as well, but we are also competing for a market, the international market. Companies like ours are able to provide access to capital without collateral in a very, very fast way, and we are able to do that at the back of technology. Because of the government's initiative, there's a lot of GST data available, account aggregators are there, everyone is today aware of bureau. So there's a lot of data which is already available in the market, and we are able to leverage that and give you a yes or no in a matter of 48 hours. And if it makes sense for you, then you are able to attack the opportunity in the market and expand. So yeah, that is what we do.
Thanks, Deepak. Moving on to Dr. Sahai again. Dr. Sahai, we've spoken about digitization, MSMEs becoming digital. What are your thoughts on that? What do they need to do? And what are the advantages? How do we get more MSMEs to adopt digitization? And we also talked about financing. So is that the piece, if we get right, that they will grow, or do you think from your experience there's something else that we need to do?
Let me first address the issue of finance. I'm not sure on the domestic financing, but when I'm looking into export financing, it is not matching the requirement. If you look into some of the data in 2022, the net outstanding for the export was around 2,27,000 crore. In March 2024, it has come down to 2,12,000 crore. That means this figure has dropped by 5%. Export in rupee in the same period has gone up around 15%. Technically, export is under the priority sector lending, but the data shows in the last 2 years there is a drop around 40% because there is no sub target for export within the 40% norms. That's why we are pitching it that at least 2.5% of the priority sector lending should go to export. It is contributing to 20% of the GDP. For export is not just the flow of credit which is important, it's the cost of credit, because you want a level playing field. You are competing with the countries which have a very low interest rate. And we also need to factor that when we are comparing the rate, generally we are comparing the key rates. If Fed has a 4.5% rate, in US credit may be available at 5%. If in India the repo rate is 6%, credit is not available at less than 8.5 to 9%. Therefore, the cost of credit for exports becomes extremely important, particularly for MSMEs, because with all these kinds of geopolitical disturbances, the long voyage period, you require credit for a longer period also. We have done an analysis generally prior to COVID and prior to 2023, the credit cycle was ranging between 30 days to 60 days. It has elongated between 90 to 150 days for most of the companies. So here the cost of credit has become important, and unfortunately some of the schemes like interest equalization, which were providing these support, they have been withdrawn. The good news is that they are part of the export promotion mission, and we are expecting that they should be rolled out very soon. Coming to the digitization, I think digitization for the export sector is much better than domestic sector. A lot of exporters have adopted to digitize process. They are looking into digital payment also. They are looking into digital marketing also. But probably in tier 2 and tier 3 cities, the message is yet not percolated. And organizations like us and various other have to play a very pivotal role in doing that, because definitely there is cost advantage for going for the digitization. We have seen that how the digitization in the government has made the life simpler for the exporter. Today, sitting in your own office, you can generate the bank realization certificate. Earlier, you were supposed to go to the bank. Now we are working with the RBI that even the export payments and the import payment pending, for which you have to go to the bank to get the detail, it will be accessible to every exporter, importer sitting in the office. So I personally feel that digitization will be a game changer. Adaptation of technology is not something which is optional. That is very much necessary, particularly for the MSMEs now.
Thank you, Dr. Sahai. Deepak, I just want to relate to one of the points on financing that you talked about, export finance, right? And you also look at cross-border trade support and financing. So, is there anything that you're doing for the smaller companies to enable them, right, in the export finance piece? And if yes, how are you structuring? What are you doing?
Yeah, so hi. My market is traditionally, small, medium enterprises. We look at financing of up to about $3 million, which will be attractive, and we do it without collateral, so which will be attractive towards smaller exporters as well. And while everyone was talking, another incident kind of came to my mind that during this whole tariff uncertainty, while we were also trying to figure out what Trump is trying to do and how tariffs are going to impact, whether it is 36% or 26%, right? We were trying to get in touch with some of the buyers, and we were surprised that, TJ Maxx and Walmarts of the world were in India within 72 hours. They had already landed in India to figure out, okay, if China is now 300%, where do we kind of import from? So that's how fast the market moves. And so how we enable credit is I mean, it's more of a service of how fast we can deliver credit, and that is we leverage technology to do that. So that is how we enable exporters. Another thing that we do, which we've seen add value and success to some of the smaller players, is that when you are expanding to a new market or you are wanting to look at, okay, who's this buyer, and it's a new country, new geography, new buyer you're trying to enter, we do provide soft touch support in doing basic underwriting to tell you, hey, is this buyer well known? Have we worked with them or not? Specifically to Drip Capital, I mean, we're working with more than 5,000 buyers. We're doing it across 100 countries. So we can give you a soft touch support that, hey, yeah, this buyer we've worked with, good. Final call obviously lies with the seller. They want to take the risk or not. But that kind of support we are also able to give, which will be beneficial to smaller exporters as they want to expand to new buyers. Thank you.
Thanks. Abhay, coming to you, we talked about financing being critical, right? How did you manage? You talked about in the beginning 10,000 SKUs was, and the kind of money that you required for that. So what kind of finance did you look at? How did you sort of different channels to grow?
So, of course, we are a equity funded startup, and now with the Reliance family. But pre-acquisition, we did take a lot of debt as we thought debt is a much better way and dilutes us less, which a lot of startups are now using. But I still see that even the big startups are still using, for example, financing against FD, which I don't know whether it's the best way. But for us, what we did is we took supply chain financing to short-term loans to PO financing. So anything under the sun, and so between that COVID period, plus minus 1 year, we did transactions, and we kind of created this whole. So today, daily payouts is a thing that a lot of funders will tell you that it's commonplace, but I'm talking about 7-8 years back. It was not so commonplace, and the first transaction with Northern Arc that we did was our first transaction and their first transactions to do so. And I think we were the first few, we did it in 2017, I think, first few in the industry to do it. Then one transaction we did with Credible, which again today has become a big player in the market. There we did uh, vendor financing on our PO. So that, and then we did a transaction with Oxizo of business, and for us, it was their first transaction with us. So, and their first transaction generally. So that also was they did two kind of transaction with us. One is we sell to marketplaces. They kind of funded bill discounting standard. Marketplaces also do the bill discounting. What they did is it was without collateral, and we could turn around the payout in about 2 days. So imagine I met the person running it is Ruchi. I met Ruchi that evening, that night we signed the term sheet. Tomorrow morning we had the funds. So it was that quick, and speed is what, again, same with Credible. Speed is what is critical. We have about 350 vendors that we work with at a time. Getting documents signed from all 350 of them, Credible took the lead. They got it signed. And within, I think, 7 to 8 days, we got about 65, 70 crores to small vendors who do about 2 crores. So 2 months of funding to each of them in 7 to 8, 10 days is what they could manage on their own initiative. So, and I was very clear that I don't have the bandwidth, nor do I have any interest in doing your job. You're the ones earning interest, and you have to speak to my vendors. I will give you the agreement copy. This is what I will sign. But rest everything I will only support on calls, but the running around is your job. So there are today enough and more people, and my good friend here is also saying the same thing, that they support in a lot of ways. So access to finance has become, in my view, fairly simple today, for an MSME at least. But again, when you go to a bank, today, for example, if I want to raise debt, it's very complicated because Reliance First doesn't allow debt. But even if I wanted to, I would have to get a corporate guarantee. Most of the NBFCs would go to Reliance, if ideal case scenario. So I'm saying, before this, I was with MMTC PAMP, which is a gold and silver refinery. So there we were dealing with almost all banks, and we have about 40,000 crores of debt on our books. So there we took from, but the process there was so, it was so tiring. But that you start a conversation, it will take 7 months, 8 months. While compared to that, a Nova Scotia from Canada will give me a debt in 2 days, only basis a phone call and a collateral. He knows that there is gold moving from Tanzania to India for refining, and he has to finance it. There is industry understanding. But banks, again, today, even today, I go to a bank, I want to raise some money, I'll even today get at 13-14% when the business is proven. There is a pedigree of 14 years. But NBFC, for example, would give me in a lower rate, but the expectation again is 7-8%, which is, I think, still far ahead.
Thanks. Abhay, moving on to Debajyoti, we were talking about delayed payments, right? That's one of the things which impact MSMEs quite badly. We've also done quite a few reports from DNB side on delayed payments. We have a paydex score globally, on the payment cycle. So your thoughts on that?
Yeah. So now sometimes, delay can also mean non-payment. And we see many large cases of insolvency resolution where, even the more successful resolution cases, the operation creditors have hardly got anything. Now, before coming to this seminar, I looked at the MSME Samadhan website, and I found that there were almost 250 lakh applications involving 50,000 crores where MSMEs have reported non-payment. The actual delay in payment would be much, much larger. Now, MSMEs have gone to the extent of reporting on the MSME Samadhan portal. And out of this 250,000 applications involving 50,000 crores, 30% have not even been examined. So instead of that, I mean, I'm not saying do not use this recourse, use another, national infrastructure institution, which we are there. It's very simple to use. And the principle is, again, that if you are a lender to a corporate, then you have access to the credit history of the corporate. So that means if you supply on credit to a company, if you submit that information to our company, Nationally Governed Services, then Nationally Governed Services would make available the credit history of that corporate to you. That's one part. Second part, if you are there on the portal as a creditor to that corporate, you will also get real-time alerts. Alerts on what? Alerts on defaults to other creditors, alerts on possible insolvency where applications have been filed. So all these real-time alerts you will get. So there are a number of ways you can leverage this. After you make this first supply, you can access the credit history and you find that he's not good enough, he is defaulted already to suppliers. Then you can strengthen your credit process, you can ask for advance payment, you can even stop supplies. And then you also get advance alerts regarding in default to other suppliers or even to banks. In such cases also you can be alerted and you can take enough steps to protect your interest. One final point, and this is true for both our earlier services and for this credit service, is that, as I said, we are a national infrastructure institution. And the idea of our institution was to make our services affordable and available to everyone. And of course, we are subject to various supervision by various government agencies. So whatever data is there with us is safe and secure. So the clear message is that this is an institution which is there for all MSMEs to use. It is low cost and very easy to use. And large part of the process is automated.
Thank you. Time's up. You wanted to add something?
I just want to add one small thing. Although I was an MSME pre-acquisition, but now not anymore. We have kind of shied away from working with MSMEs because of this problem, and all my critical areas like inventory, I don't work with MSMEs anymore because sometimes business goes through cycles and 45 days kind of becomes tough sometimes, and the problem is, even though the vendor will not ask for an interest, your auditor will ask so, or RIL balance sheet will ask so. So what you end up doing is paying interest without any requirement from your side or the vendor side, and that kind of breaks relationships and breaks margins, and so there is a downside to that also, which other MSMEs are also feeling. So that's what I wanted to highlight, and also take feedback from all the others. Because I've been doing this for about 7-8 months, about a year now almost, where I've said no critical parts to be procured from MSMEs directly. You want to work, create another firm and bill us from there, and we make payments in 60 days, but business cycles are such, it goes to 75 sometimes and you can't help it. So I don't know how the others are dealing.
No, in fact, this is an extremely important case of exporters and those who are MSME. Their buyer is making payment in 120 to 150 days. They have to make the payment within 45 days. So it's creating some problem, and that's why people have hesitated before courts also. That is a contractual obligation why government wants to impose it. But government in its own wisdom has done it. So let us say what the call of the court on that matter.
Okay, thank you. I think time's up, so we'll not take. You have one question then? And then
One is the information sharing for you people. That is, I've worked in some big corporates. Now I'm retired. And in these big corporates, like some of you said, about 250,000 complaints are still unresolved about the payment to MSMEs. So what these big corporates do is they issue the check on 31st March and they cancel the check after 31st March. So it doesn't show into the balance sheet. So that's a bypass way which people are using. That's the information. Now the other one which I have a query is that the credit history which is available to the MSME from the national e-government services. So is that a paid service or it is free of cost? Number one. Number two, what is the process through which you create that credit history of the debtors?
Okay.
Thank you.
So, first of all, like I said, our services are affordable and accessible to everyone. The report doesn't cost anything; it's free of cost. But submission of information has a cost. For submission of your credit, one invoice or a bundle of invoices, that is 60 rupees. 60 rupees only. And what was the second question? And how do you build the credit history? So,
Yes, how the credit
see,
history is, what is the basis of the
yeah,
credit
yeah.
history?
So the credit history is already with us, right? We are only providing access. So if you are supplying stuff to a customer, so that customer's credit history is already with us. So we
Fine.
are only providing the access to that.